Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing reasons why investors may want to stay invested in the market right now instead of jumping ship.
Yeah, it's an important conversation because there's a lot of opportunity right now to build wealth. It may not feel like it when you listen to the talking heads on CNBC or on the radio or whatever it may be.
Wherever they are.
Yeah, or the down market is the talk of the dinner table, but there's a lot of opportunities and reasons to stay invested right now.
All right. Well, before I hand the floor over to you and we go through those reasons, if you like the content of this video, do us a favor, hit that like button, press it, hit it, gently touch it, whatever you need to do. And don't forget to subscribe to the channel. Yes. All right, Brian. So what's the first reason to stay invested and, not write out this market in cash?
Yeah. Number one, buy low, sell high. I need one of them signs. Buy low, sell high, right? It's not the other way around. Remember that. Human emotion drives us to buy when everyone else is buying. It's called FOMO, or fear of missing out, right? And you know what that is. If you know what FOMO is, you know what I'm talking about. And we sell when everyone else is selling, but this is the wrong way to do it. Do the opposite. Be the contrarian investor. Look at your time horizon for your investments. Do you plan on using the funds next week or 10 years down the road? Do you think the market will be higher or lower when you plan on using your funds? If you think it will be higher, then now's the time to buy.
Yeah, I'm over here smiling when you're talking about FOMO because I've gotten into so much trouble over the years. That 2 a.m, should I go buy that right now? And then you buy it and you're buying at the top and you're like, well, that was just
buyer's remorse.
For sure, right? It doesn't always happen, but yeah, it's that. Anyone who knows it, who's had it, knows exactly what it is. And it is powerful. So powerful. All right. So what's another reason to stay in the market?
Okay. Time in the market versus timing the market.
A big one.
Okay. A good friend and mentor of mine has always told me that trying to time the market is a zero-sum game.
Yes,
you just can't do it. Even the best investors in the world have no success at this. The goal is to stay in the market and be there when the tide turns to the upside. And now that I'm speaking about that, I'm going to roll right into the third reason, because volatility is your friend. Okay. There could be volatile times in the swings in the stock market from time to time. And we've seen them 1,000-point swings in the Dow in one day. And this volatility brings opportunity.
Yes, it does.
Opportunity for you to rebalance. Opportunity for you to buy more stocks while the prices are declining. Opportunity for you to bring down your cost basis on your long-term favorite stocks. It's huge.
I like to look at volatility as a super sale. If you play your card right, you can get some great deals and accumulate way more than you can in the bull market. I mean, that sounds stupid. It sounds so simple that it sounds stupid, but a lot of us do the opposite, right? Plus you've got exactly. So plus investing during inflationary periods like we're in right now, it helps hedge against that, because now you're accumulating something that's down here that will go up. And anyway.
Yeah, you're exactly right on both points there, Michelle. And that's actually my fourth reason. Look at the history of stocks during inflationary times. Time has shown that stocks can help you beat inflation. The S&P average return annually has been 10.7%, which is much higher than the recent inflation numbers, right? So it makes sense to be buying stocks during these inflationary times and to continue holding what you do have. And here's a quote. Here's a quote from a 40-year seasoned advisor. It's interesting that the market historically goes up 80% of the time, but we tend to forget this also means the market goes down 20% of the time. Mm-hmm. It is how we react during times of uncertainty that has the most significant impact on our longer term performance.
So true.
Makes sense, right? Also, Warren Buffett loves talking about inflationary times. One tip he has is to focus on companies that generate not consume capital.
Uh-huh. Yeah.
Big
Yeah.
difference. Makes sense, right?
Absolutely. It's amazing how historical data can cool emotions, right? Like very quickly and help investors put things in perspective, right? When in doubt, zoom out. That's what they say.
That's right. It really helps investors focus rather than reacting in a way that they're going to regret later down the road.
Yeah. So do you have any other reasons before we wrap up the video?
Yes. The last reason I have, the fifth one, is to be the Colonel William Prescott for your retirement.
Who's that?
I knew you was going to ask. Michelle, Colonel Prescott was credited for saying, "Don't fire until you see the whites of their eyes at the Battle of Bunker Hill during the Revolutionary
War." Right.
Okay, so we can use that today as we're here. You know, we hear the cries from media personalities that there's blood in the streets as the market was plummeting. What this does, Michelle, is allow us to strike or buy stocks while everyone else is selling. Be the better person and buy what everyone is selling, and your retirement may be rewarded in the future.
Absolutely. I love it. Great tips, Brian. Anything else you want to add, or is that it?
That's it for today.
Okay. If you found this content helpful, go ahead and hit that like button, subscribe. And if you have questions or you think we're absolutely wrong, leave us comments below. We'd love to hear from you.
Yeah, we want to hear the other side.
Yeah, for sure. Absolutely. All right. Thank you, everybody. And thank you, Brian.
Thanks, everyone. Have a great day.